Hello and welcome to the ISE ETF and Index Outlook for February 20th, 2012. This is Patrick Sresna. As always, we start off with a chart of the S&P 500 using that spider exchange rate fund symbol SPY. For about going on 3 weeks now, we've been talking about the potential of a market correction and when and how it would begin. The market is going to start the week with a little boost from news coming out of Europe, and we'll start off with a little bit of a push higher. Now, while we have been looking for this rally higher and still actually remain relatively bullish the market into April and May, we've been trying to anticipate where a little short-term market top and subsequent market corrective pattern would occur. This is not something that we anticipate would be substantially bearish, even if it had one or two more dramatic days. In the past, this S&P 500 has demonstrated pulling back as much as 40 to even 80 S&P points during one of these pullbacks, but it will emerge as being a buying opportunity into that weakness. So at this juncture, when we look at this zone up above, there is still some substantial highs right around where we're trading. We're trading near the highs of 2011. Subsequently, any short-term burst higher would finish a little shorter moves that could even potentially test the 140 level on the upside or of the SPY. But overall, we're very skeptical of the sustainability of this push higher without first correcting downwards. At that stage, we will be buyers of the S&P and accumulating for the next move higher. Now, I wanted to focus on three different indices and ETF products associated with them to highlight some of the interesting technical patterns we're observing. The first one I wanted to talk about was the ISE Global Platinum Index, which is the ORE. There is an ETF product that you can trade with that, which is the symbol PLTM. At this juncture, we recognizing at least this flagging formation that is developing. Now, in general, platinum has been underperforming that of so many other metals. Gold, copper, and so many other types of metals have actually done substantially better. And we're seeing now that a little green reversal candle and a potential break of this flag higher, that could potentially at minimum see and lead to a test of the 22 area up above where the highs came in October and the lows of August. But there is always room that if there's any real momentum in the broader markets that the platinum prices could retest even the 2450 to 25 level on the index up above. But the core of all of this will be whether or not we get a little breakout here. We're looking for some follow through on last week's closing price action. So we want to see Tuesday morning the markets show some bullish follow through, and the faster you can get above the 21 price, the more likely it is that there will be that follow through on the upside. The next one I wanted to highlight was the natural gas index, which is the symbol FUM. There's a number of leveraged ETFs, including a standard ETF that you can trade, the natural gas index. And we were substantially bearish the natural gas index over the last 4 weeks, 5 weeks, as we were seeing whether or not it could actually hold that 105 support line. But now that we have some clear evidence that that support line is held, it's been now tested numerous times. More importantly, we had some substantial strength in the reversal higher. Now, the first thing that we're going to be watching is going to be the overhead resistance as we approach the 120, 123, and therefore we're not too anxious to go in a fully invested mode into the natural gas index. But if we do get some strength up into those zones and the consolidations appear as flagging formations or just natural retracements, we could see a short-term turnaround in the natural gas index that may have us turning to buyers. Finally, the last one I wanted to have a quick look at was the ISE Global Engineering and Construction Index, which is the symbol CVL. The ETF product trades under the symbol FLM. And really, we've been looking for last week a little pullback into those flagging formation, and we were suggesting it didn't even have to go down towards a 235, 240 level on the downside. And just like we see on platinum, there's this little breakout candle that is trying trying to develop out of this flagging formation that may be a little bit of an early signal as to whether or not there's a new bullish breakout occurring. Interestingly enough, the highs of 2011 in June, July, all occurred around the 275 level on the upside. So if we got a really good boost here that particularly broke this global engineering and construction index to new highs, there's definitely room for 10 to 15 index points on the upside to those highs of the previous year. That was your ISE ETF and index outlook. Thank you for joining me.